Okay, good afternoon, ladies and gentlemen, and thank you for joining us today. As the lady said, I'm Sam Hijazi. I'm the partner in charge of Grant Thornton in Abu Dhabi. I'm also global head of Islamic finance for Grant Thornton. My background is, well, my life is a bit of a story of a tale of two cities. So I actually went to school in Abu Dhabi, and then I went to university in London. Then I came back to Abu Dhabi. I joined and trained with Ernst & Young, and then I went and joined KPMG's financial services team in London, and then I came back here in 2015 to join Grant Thornton. So there was an expression once in a while that all roads lead to Rome. My wife quite likes that expression. It's just, she says, in my case, all roads seem to lead to Abu Dhabi. Anyway, back to Islamic finance. So what we've tried to do in this presentation is just try to look at where Islamic finance is around the world with respect to fintech. So we'll start with an overview of facts of Islamic finance. First of all, in terms of global assets around the world, we're talking about something like $2.5 trillion. Expected growth in Islamic finance assets in the next few years, probably $3.2 trillion. Concentration of Islamic finance, probably more than 60% of it is concentrated in the GCC and Malaysia and the Far East. In terms of where the UAE is probably easily the third largest Islamic finance market in the world. And across banking, capital markets and insurance, Islamic finance at the moment is dominated by the Islamic banking sector. So let's just take a look at some of the milestones in Islamic finance over the past 40 years. I mean, one thing to bear in mind is that while banking has been around for hundreds and hundreds of years, Islamic finance, at least in its modern form, is relatively new and has been around for around about the past 40 to 45 years. So one of the first key milestones in the history of modern Islamic finance actually happened here with the establishment of Dubai Islamic Bank in 1975. The first modern standalone Islamic bank in the world. That was quickly followed by the establishment of the Islamic Development Bank in Saudi Arabia, which was the shareholders of which are nearly every single Muslim country in the world. Kuwait were quickly followed on the heels of Dubai with the establishment of the Kuwait Finance House in 1977. Turkey followed with its own version of Islamic finance, which they called participation banking in 1984. Bahrain is recognized today as a leader in Islamic finance. They established the Accounting Noting Organization for Islamic Financial Institutions in 1990. Pakistan followed with the issuance of regulations by the State Bank of Pakistan to further regulate the development of Islamic finance. Malaysia established the Islamic Financial Services Board, which we'll talk about a little bit more shortly, in 2002. And even the UK government issued its own Islamic bond in 2013. So taking a wider look at the spread of Islamic finance around the world, well, obviously Islamic finance is very much concentrated in the Islamic countries. So the leaders in Islamic finance in terms of share of assets around the world are clearly the GCC countries, Malaysia. But as you can see from that chart, there are a lot of other countries with at least some aspects of Islamic finance operations, whether it's banking, insurance, or capital markets. So we've also got countries like Turkey, Bangladesh, Indonesia. Sudan claims to have a fully fledged, complete Islamic financial system, as does Iran, incidentally. And then there are other countries like Egypt, which have some Islamic financial operations. And then other countries like Luxembourg, UK, Ireland, Switzerland, France, Germany. The small percentage there for others, they're included in there. But if you take a map of the world, you'll pretty much find some aspects of Islamic financial operations, whether it's banking, capital markets, or insurance, in most countries around the world, all the way from the west to the east. This next slide describes what we like to call the infrastructure of Islamic finance. So the standard setting bodies or the facilitating bodies of Islamic finance around the world. So starting from the left-hand side, we have the Accounting Noting Organization for Islamic Financial Institutions. They are a body which sets Sharia standards for the Islamic financial industry. They set unique accounting standards for the Islamic financial services industry. They also set various ethics, auditing, and governance standards. These are, generally speaking, quite high-quality standards. The challenge with their standards is the extent to which they are adopted around the world. As of today, there is limited adoption of these standards around the world, whether it's the Islamic world or outside the Islamic world. That's followed by the Islamic Financial Services Board, which was set up in Malaysia in 1990. The idea of the Islamic Financial Services Board is to complement the work of the Basel Committee. So not to contradict or contrast with the work of the Basel Committee. It's to help the Islamic financial services sector fit more squarely into the global financial services sector and to be as consistent as possible with Basel while recognizing the unique differences of Islamic financial services and products. Again, like the Accounting and Auditing Organization for Islamic Financial Institutions in Bahrain, the challenge with the standards of the Islamic Financial Services Board is the extent to which they're adopted by different countries and regulators around the world. Again, like their peer in Bahrain, as of today, there's limited global adoption of these standards around the world. Continuing, we have the International Islamic Financial Markets, also based in Bahrain. They complement the work of the Loans Markets Association. And like the Accounting and Auditing Organization for Islamic Financial Institutions and the Islamic Financial Services Board, the idea is to produce supplementary guidance, supplementary documentation and products, to help Islamic financial products fit more squarely and neatly into the global financial services sector. And then finally, we have the International Islamic Liquidity Management Center, which is based in Malaysia. And again, that's a global organization. The shareholders are central banks around the world, mainly central banks from the Islamic countries. And the idea is that the IILM issues Sharia compliance liquidity management instruments, which can be used by Islamic financial institutions around the world. So just in terms of where the different countries, because as we can see from the previous charts, each country has different volumes, different sizes of assets within the Islamic financial services sector. So we took a closer look at what we call the Islamic Finance Development Indicators, something which has been developed by Thomson Reuters and which looks at 5 different sets of criteria, which you can see on the screen in front of you. So the first criteria is around quantitative development. The second is governance. The third is corporate social responsibility, knowledge, followed by awareness. And there are different ways of measuring each of these 5 criteria in the different Islamic finance countries around the world. What's interesting about the 5 criteria and the sub-definitions within each of the 5 criteria is, as you can see, fintech is nowhere to be seen, at least for the moment. So this is based on a review of the Islamic Finance Development Indicator for the year 2018. We're optimistic that going into 2019, 2020, that fintech is going to find a space in that indicator. And then following the criteria in that indicator, we arrive at the top 5 Islamic finance countries in the world based on those indicators. As you can see, Malaysia leads the pack. UAE and Bahrain have pretty much been vying for the 2nd and 3rd spots for the past several years. As of 2018, UAE at the moment is number 3. And then we tried to do a bit of research to try to make a link between what's happening in Islamic financial services around the world and what is the link with fintech around the world. That's easier said than done. We did a lot of desktop-based research to try to identify countries which claim to be service providers from fintech to the Islamic financial services industry, or which claim to be Sharia compliant fintech providers. And honestly speaking, it's not that easy to perform this research. Based on what we have found so far, as you can see, actually the top two individual geographies for fintech providers are actually the United Arab Emirates and Indonesia. And if you look on the left-hand side with the pie chart on the left, interestingly, a lot of the other fintech providers to the Islamic financial services industry are actually based in the US and the UK. On the right-hand side, we see the breakdown of the fintech industry as of today by function, and as you can see, it's tilted at the moment towards business and consumer financing. But in terms of the number of fintech providers as of today, right now for the Islamic financial services industry, we're talking about 80 to 90 companies. So that's not a lot. And in terms of where the global fintech industry stands, it's really a drop in the ocean. So I think the message coming out of those statistics is basically for Islamic finance and the fintech industry, there's everything to go for, there's everything to play for. Then what we try to do is link the challenges of Islamic finance to the solutions that fintech can provide. Now, there have been a lot of publications and research about what are the key unique challenges of Islamic finance, and we could go on and on for a day about the key challenges. So what we try to do is just focus on 3 or 4 of the key challenges of Islamic finance and cross-link them to where fintech has a unique proposition to help address some of those challenges. So one of the first challenges is around regulation by central banks, by people like ADGM, people like the DFSA. So taking conventional regulation and fitting it to the unique challenges of Islamic finance. Different regulators around the world have met that challenge in different ways. Some follow separate regulations for Islamic finance. Some try to force Islamic finance to fit into conventional regulation. What we're saying, the opportunity for fintech is regulatory sandboxes. That's an opportunity to put specific Islamic finance regulations on a standalone basis and test them without damaging the industry. Another challenge is around legal harmonization and Sharia compliance. So there's a lot of talk in the industry about the fact that Islamic products are governed under different laws. So some products are governed under, for example, UAE law. Some products are governed under English law. Then there's a challenge of Sharia compliance. A lot of people say that the products which are marketed as Sharia compliant in Malaysia are not acceptable as Sharia compliant in places like Saudi Arabia and the UAE. So again, where fintech might fit in is around blockchain, standardizing the documentation for the products around Islamic finance to try to make them more readily acceptable in all the major Islamic finance jurisdictions around the world. Another challenge of Islamic finance is around financial inclusion. A lot of people have the misconception that Islamic finance is just for the Muslims, and that's clearly not true. Islamic finance is a fantastic product, and it should be made available to every race, every nationality, and every religion. And it should be competitive to every sector of society. And where fintech can come in to help, could be around fintech crowdfunding, artificial intelligence, data analytics, and so on. And then finally, human capital, something we'll talk a little bit more about. Do we have the right people to run Islamic finance, the Islamic financial services sector for the future? And that all comes back to what is happening in our education sector today. So again, we did some research around what we call the knowledge economy or the education sector for Islamic finance around the world. We obviously took a close look at what's available in the UAE, and then we tried to benchmark it to other major providers such as the UK, Malaysia, and Bahrain. As you can see from the slide in front of you, there are quite a lot of courses, degrees, and qualifications available in each of these 4 countries, each of which claims to address the various different aspects of Islamic finance, whether it's banking, capital markets, takaful, or whatever. But while there are actually more than 100 courses, qualifications, and degrees available across those 4 countries, there is very little available in the form of Islamic fintech. So again, Islamic fintech has got everything to play for when it comes to Islamic financial services. Again, drilling down into the research we did around the UAE education sector, we found a fundamental disconnect between what's available in the education providers and what the industry needs. And basically what we need is more engagement between the providers and the industry. And again, that's where fintech can come in. So we've developed this roadmap setting out what is the way to revamp our education sector. So not to try to fix what's been running in the past and what doesn't work for the banks and the Islamic insurance companies, but how can we design a knowledge economy in the UAE that's suited for the future and which draws in the best elements that fintech has to offer. And that kind of summarizes it. I think in conclusion, what we're trying to say from this presentation is the UAE is one of the most innovative countries in the world, whether it's the Islamic world or the GCC. We're one of the only countries in the world where we have the Ministry of Innovation, we have the Ministry of Happiness. We say there is a huge role for fintech to play when it comes to Islamic finance, and there is a huge role for ADGM to play in terms of joining up the dots and revamping the education sector. We don't have a Ministry of Fintech. We say let ADGM be the Ministry of Fintech for the UAE in the future. Thank you very much.